It's open enrollment season again. Time for those big bundles of paperwork with pages and pages, numbers and numbers, and terms that confuse more than they clarify. Now, I'm a financial nerd. I love going through this information, but I recognize that not everybody does. That said, I do think it's important that we touch on and review these benefits available to you. Specifically today, we're going to be talking about health insurance. Reason being is because making the right choice here could save you tens of thousands of dollars for you and your family. So specifically, as we're going through health insurance, here are 5 things that I want you to be mindful of as you're reviewing your employer health options. The first thing that we want to go through is premium. So your premium is really just what you're going to be paying for this coverage. Now, it may be expressed in your benefit booklet as a monthly or perhaps even an annual amount. And typically you'll have to do some math to try and work out to see how much is it going to cost you on a per pay period basis. All that to say, this is an amount that you're going to have to pay each and every time. It's regardless of whether or not you actually go to the doctor or not. The second thing we want to talk about is deductibles. Now, your deductible is how much you have to pay before the insurance company starts kicking in their share. Typically, this deductible can range between a couple $100s to even a few thousand. Now, while you may have a high deductible plan, that doesn't necessarily mean it's a bad plan. Typically, the higher your deductible is, the less your premium will be as well. They're inversely correlated. Now, if you had a low deductible, it's very common that you have a high premium as well. Again, not always, but that's typically what we see. Third, we're talking copays or coinsurance. This is when we're starting to get cozy, pardon the joke, with the insurance company. Now, every medical expense that we have after our deductible, we have to start paying alongside the insurance company. So whether that's going to the doctor and we have a copay of $20 or $50 for that visit, or we have a coinsurance amount wherein we are responsible for 20% of that visit and the insurance company is going to cover the other 80%. Either way, this copay or coinsurance is laid out in that benefit booklet, and it's important to know while both you and the insurance company are paying, how much you're going to be responsible for each dollar that comes in for medical expense. Number 4, out-of-pocket maximums. So out-of-pocket maximums are essentially how much at the end of the day, if you have a really catastrophic event or a series of medical expenses, how much you would be responsible for throughout the year, excluding the premium up above. Now, this out-of-pocket does include your deductibles and your copays and coinsurance. So in other words, you can think about this, if your out-of-pocket maximum is $10,000 and you have medical expenses that cost $15,000, the most you would pay throughout the year would be just that $10,000. Think of your out-of-pocket maximum as a ceiling for how much you can pay throughout the year. Number 5, accounts and assistance. So with each of our health plans, we typically have available to us some various health savings accounts, maybe a deductible reimbursement account, or maybe a flexible savings account for healthcare. It's important to know which plans offer which accounts, because coordinating the benefits and coordinating your contribution to those accounts is really important to making sure you're getting the best bang for your buck in selecting your plan. Now, when we talk about assistance, I do want to lean into there a little bit. Typically, we see assistance come in with higher deductible health plans that coordinate with the health savings account. So think about this in the realm that because we're electing a higher deductible health plan, again, we're taking on more of the risk as the insured. The premium is going to be less. Well, since our employer is saving on that premium, remember they pay a portion of our premium as well, they're willing to kick in some money for us into maybe a health savings account so that we can actually start saving up and building up a little nest egg for our future health expenses. Typically, we like to see clients using HSAs more than we do FSAs. Reason being there, HSAs allow you to carry over funds from year to year for future medical expenses as they may arise. FSAs, however, you're kind of restricted because you do need to make sure you're using those funds within a short time frame. It used to be within a year. Some of the restrictions have been lifted slightly, but all that to say, we still do want to lean towards an HSA account were available. Each of these variables is a lever that can influence which plan that your employer offers would actually be the best plan for you. We typically will walk through with clients all the available plans that their employer offers, go through each of these variables, and really determine if you expect X number of medical expenses throughout the year, or you have a catastrophic year where something significant happens, what's your potential liability from a medical cost standpoint on all of those plans, and really make a determination or recommendation to say, you should look at this plan over that plan. If you'd like some help going through all of that and figuring out what would make sense for you and your employer plans, let us know. We'd love to help.